Based on the historical data and forecast, Bitcoin shows a slight upward trend, bouncing between the support of 64,100 and the resistance of 66,600. The RSI fluctuates around 50, indicating neither overbought nor oversold conditions. However, considering the forecast for the next week, the price is expected to hover around 64,000 to 65,000. I propose a moderate bullish strategy leveraging the Bollinger Bands and RSI. We will enter a long position when the price touches the lower band of the Bollinger Bands, which is around 63,800, and the RSI falls below 50. Our stop loss will be set just below the lower band at 63700, and the target price will be the upper band at 66400. To refine this strategy, we'll incorporate RSI signals. If the RSI dips below 20, indicating an oversold condition, and the price is near the lower Bollinger Band, we'll enter a long position at 63,800. The stop loss will be at 63700, and the initial target price will be 65,000, near the upper Bollinger Band. If the price continues to rise and the RSI reaches 80, indicating an overbought condition, we'll move the target price to 66,400, close to the resistance level. This combined strategy aims to capitalize on both Bollinger Band breakouts and RSI-driven reversals, maximizing potential returns while minimizing risk. Based on the historical data and forecast, Ethereum exhibits a generally upward trend with periods of consolidation. The support price consistently remains at $1,810, while the resistance fluctuates around $1,930. The RSI fluctuates between 53.9 and 66.3, indicating periods of both slightly oversold and overbought conditions. The Bollinger Bands show that the price has been trading within the bands recently, with the upper band around $1,960 and the lower band around $1,510. Given this analysis, I propose a strategy that combines RSI and Bollinger Bands. We will enter a long position when the RSI dips below 20 and the price touches the lower Bollinger Band, aiming to capitalize on potential rebounds. Specifically, I recommend entering a long position at $1,880. A stop-loss order should be placed at $1,810, just below the established support level, to mitigate potential losses if the price declines further. The initial target price will be $1,930, aligning with the recent resistance level. If the price reaches $1,930, we will consider moving the stop-loss to break even to protect profits. Furthermore, if the price continues to rise and touches the upper Bollinger Band around $1,960, we will set a second target price at $1,960. This layered approach allows us to capture significant gains while managing risk effectively. Based on the historical data and forecast, BNB shows a slight downward trend with decreasing forecast prices. The RSI consistently remains between 43 and 52, indicating neither strongly oversold nor overbought conditions. The Bollinger Bands have been fluctuating, with the price occasionally touching the lower band but rarely the upper band. Considering these factors, I recommend a moderately conservative strategy. We will utilize the RSI and Bollinger Bands to identify potential entry and exit points. My strategy involves a tiered approach combining RSI and Bollinger Bands. First, when the price touches the lower Bollinger Band and the RSI drops below 45, we enter a long position at $558. The stop loss will be set at $550, just below the support level, to protect against significant losses. The initial target price will be $571, aligning with the recent resistance levels and the center of the Bollinger Bands. If the price reaches $571, we will move the stop loss to break even, which is $558. If the price continues to rise, we will set the final target price at $582, based on the recent high. This strategy aims to capitalize on short-term bounces while mitigating risk through strategic stop-loss placements. Based on the historical data and forecast, XRP has been trading within a relatively tight range between $1.07 and $1.11. The RSI has fluctuated between 39.6 and 57.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands have also shown some volatility, with the price occasionally touching the upper and lower bands. Considering the forecast prices are consistently around $1.1, I propose a moderately bullish strategy. We will use the RSI and Bollinger Bands to fine-tune our entries. My strategy involves a combination of RSI and Bollinger Band signals. I recommend entering a long position when the RSI dips below 40 and the price touches the lower Bollinger Band. Specifically, enter a long position at $1.07. Set a stop-loss order at $1.06, just below the lower Bollinger Band to protect against unexpected downturns. The initial target price is $1.14, near the recent resistance level. If the price reaches $1.14, consider moving the stop-loss to break even to secure profits and potentially ride further upward momentum. Given the forecast price of $1.07 on July 31, 2026 Friday, I would adjust the target price to $1.11 to ensure a reasonable profit while accounting for the forecast. This combined strategy balances risk and reward, aiming for consistent gains within the current trading range. Based on the historical data and forecast, Solana shows a fluctuating trend with a recent downward bias in the forecast period. The RSI consistently fluctuates around the midpoint, indicating indecision. The Bollinger Bands have been widening recently, suggesting increasing volatility. Considering these factors, a cautious approach is warranted. I recommend a strategy that combines RSI and Bollinger Bands to capitalize on short-term fluctuations while managing risk. The entry price will be $72.3, coinciding with the forecast price on July 31, 2026, and the bottom of the Bollinger Bands. The stop-loss price will be set at $70.3, slightly below the bottom of the Bollinger Bands to account for potential volatility. The target price will be $75.2, near the resistance level, providing a reasonable profit margin. To refine this strategy, we will incorporate an RSI filter. If the RSI falls below 20, indicating an oversold condition, we will consider a long position at $72.3 with a stop-loss at $70.3 and a target price at $75.2. Conversely, if the RSI exceeds 80, indicating an overbought condition, we will consider a short position at $72.3 with a stop-loss at $74.3 and a target price at $70.3. This combined strategy leverages both the volatility indicated by the Bollinger Bands and the momentum signals from the RSI to optimize entry and exit points, aiming for high returns while minimizing risk. Based on the historical data and forecast, TRON shows a slightly upward trend with price fluctuations around the support level of $0.329 and resistance level of $0.332. The RSI indicates that TRON is currently in a neutral zone, fluctuating between 44.4 and 56.7. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential pullback is possible. Therefore, I recommend a strategy focused on short-term gains capitalizing on potential retracements. My recommended strategy is to initiate a long position at $0.331. Given the proximity to the upper Bollinger Band and the RSI nearing overbought territory, I will set a stop-loss at $0.329, just below the support level, to mitigate potential losses if the price breaks down. The target price will be $0.334, aligning with the upper Bollinger Band and providing a reasonable profit margin. This strategy combines technical indicators and price action analysis to maximize potential returns while minimizing risk. Based on the historical data and forecast, Dogecoin shows a downtrend with increasing volatility. The price has been fluctuating within a range between $0.0692 and $0.0719, with the RSI consistently below 50, indicating bearish momentum. The forecast suggests a continuation of this downtrend, with prices potentially reaching $0.0669. Combining these factors, I recommend a short selling strategy. We will enter a short position at $0.073, placing a stop-loss at $0.0744 to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.0692, aligning with the established support level. To refine this strategy, we will integrate the Bollinger Bands and RSI indicators. The price is currently near the lower band, suggesting a potential bounce. However, the overall downtrend and bearish RSI warrant caution. If the price touches the lower Bollinger Band at $0.0692, we will consider covering the short position and potentially initiating a long position with an entry price of $0.0692, a stop loss at $0.0689, and a target price of $0.07. This combined strategy leverages both the downtrend and potential short-term reversals for optimized returns. Based on the historical data and forecast, Zcash demonstrates a volatile trend with periods of both upward and downward movement. The support price remains consistently at $463, while the resistance fluctuates around $546. The RSI values fluctuate between 47.2 and 65.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands show increasing volatility, with the recent price action consistently touching the upper band. Considering the recent downward trend in the forecast prices, particularly the decline to $482 and $481, I propose a cautious short selling strategy. We will enter a short position at $515+, placing a stop-loss order at $513+ to limit potential losses if the price reverses. The initial target price will be $503+, aiming to capitalize on the predicted downward movement. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI reaches an oversold level below 20, we will consider covering the short position. Conversely, if the price breaks above the upper Bollinger Band, indicating a strong upward momentum, we will close the short position and re-evaluate the market. For the next opportunity, we will enter a short position at $482+, with a stop loss at $481+ and a target price of $494+. This combined approach balances risk and reward, utilizing both trend analysis and technical indicators to optimize our investment decisions. Based on the historical data and forecast, Chainlink shows a slight upward trend with price fluctuations. The support price consistently remains at $8, while the resistance fluctuates between $8.38 and $8.67. The RSI values range from 50.7 to 64.3, indicating periods of both neutral and slightly overbought conditions. The Bollinger Bands have been widening, suggesting increasing volatility. Considering these factors, I propose a strategy that combines RSI and Bollinger Band signals. We will initiate a long position when the RSI dips below 20, indicating an oversold condition, and the price touches the support level of $8. The entry price will be $8. A stop-loss order will be placed just below the support level at $7.90 to limit potential losses. The initial target price will be set at the recent resistance level of $8.67. To refine the strategy, we will incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, which is currently around $8.67, we will move the stop-loss to the center of the Bollinger Bands, around $8.2, to secure profits and manage risk. If the price falls back to the lower Bollinger Band, around $7.58, we will consider closing the position or tightening the stop-loss further. The final target price will be $8.81, which is the highest value of the upper Bollinger Band. This portfolio combines the benefits of both RSI and Bollinger Bands, providing a robust strategy for high returns while managing risk effectively. Based on the historical data and forecast, Stellar shows a weakening trend, with a declining forecast price from 0.181 to 0.171 over the next week. The RSI consistently fluctuates, but recently dipped below 45, suggesting potential oversold conditions. The Bollinger Bands are narrowing, indicating decreasing volatility, and the forecast price is below the center of the Bollinger Bands. We will implement a contrarian strategy capitalizing on potential short-term bounces. Specifically, when the price reaches $0.178, we will enter a long position. The stop-loss will be set at $0.176 to limit potential losses if the downtrend continues. Our target price will be $0.184, aiming to capture a modest profit from a potential rebound. To enhance the strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI falls below 20, which it has not yet done, we'll enter a long position at $0.173. The stop-loss will be $0.171, and the target price will be $0.18. If the price touches the bottom of the Bollinger Bands, which is $0.171, we'll enter a long position, setting the stop loss at $0.17 and the target price at $0.184. This blended approach combines trend analysis with momentum and volatility indicators for a more robust and adaptable investment strategy. Based on the historical data and forecast, Tether Gold shows a mixed trend with periods of consolidation and minor upward movement. The RSI consistently fluctuates around the mid-range, with occasional dips below 40 and spikes above 50, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been relatively stable, suggesting limited volatility. Considering the support price of $3,990 and resistance of $4,110, a breakout above $4,110 could signal an upward trend, while a drop below $3,990 might indicate a downward correction. Given the forecast prices hovering around $40.50 to $40.70, a conservative strategy focusing on short-term fluctuations is recommended. Therefore, I propose a strategy combining RSI and Bollinger Bands. We will enter a long position at $4,050+ when the RSI falls below 40, setting a stop loss at $3,990+ to protect against a potential downward trend. The initial target price will be $4,070+, aligning with the forecast price and the upper Bollinger Band. If the price reaches $40.70+, we will move the stop loss to the center of the Bollinger Bands, which is $4,060+, to secure profits and reduce risk. We will set a secondary target price at $4,110+, coinciding with the resistance level. This combined approach leverages both momentum and volatility indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Starknet shows a slightly downward trend. The price has been fluctuating between a support of $0.0287 and a resistance of $0.0299. The RSI is generally below 50, indicating a weakening momentum, but it's not consistently oversold. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. Considering these factors, I recommend a cautious strategy focusing on short-term opportunities. My strategy involves a combination of RSI and Bollinger Bands. We'll initiate a long position when the price touches the lower Bollinger Band and the RSI is below 35. The entry price will be $0.0281. A stop loss will be placed just below the support level at $0.0276. The initial target price will be the middle Bollinger Band, which is around $0.0296. If the price reaches this target, we'll reassess the situation. If the RSI is below 50 and the price is still trending downwards, we can set a second target at the resistance level of $0.0299. This combined approach aims to capitalize on short-term bounces while managing risk effectively. Based on the historical data and forecast, PancakeSwap has been trading within a range between $1.39 and $1.44. The RSI has mostly remained between 50 and 60, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands have been relatively stable, with the price fluctuating around the middle band. The forecast for the next week indicates a stable price around $1.41. Considering these factors, I propose a moderately bullish strategy. We will enter a long position at $1.4, placing a stop-loss order at $1.39, just below the support level. Our initial target price will be $1.44, the resistance level, aiming for a 4% gain. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will consider entering a long position at the prevailing price with a stop loss at $1.38 and a target price of $1.43. Conversely, if the price touches the lower Bollinger Band, it suggests a potential buying opportunity. We will enter a long position at $1.37, set a stop loss at $1.36, and target $1.43. Combining these signals with the primary strategy, we will prioritize the initial long position at $1.4 with a stop loss at $1.39 and a target price of $1.44 for a balanced and efficient portfolio. Based on the historical data and forecast, Dogecoin shows a downtrend with increasing volatility. The price has been fluctuating within a range between $0.0692 and $0.0719, with the RSI consistently below 50, indicating bearish momentum. The forecast suggests a continuation of this downtrend, with prices potentially reaching $0.0669. Combining these factors, I recommend a short selling strategy. We will enter a short position at $0.073, placing a stop loss at $0.0744 to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.0692, aligning with the established support level. To refine this strategy, we will integrate the Bollinger Bands and RSI indicators. The price is currently near the lower band, suggesting a potential bounce. However, the overall downtrend and bearish RSI warrant caution. If the price touches the lower Bollinger Band at $0.0692, we will consider covering the short position and potentially initiating a long position with an entry price of $0.0692, a stop loss at $0.0689, and a target price of $0.07. This combined strategy leverages both the downtrend and potential short-term reversals for optimized returns. Based on the historical data and forecast, Plasma shows a downtrend with fluctuating volatility. The RSI consistently remains below the 50 mark, indicating a bearish sentiment. The forecast for the next week predicts a continued downward trajectory, with prices hovering around $0.08. Considering these factors, I recommend a short position strategy. We will enter a short position when the RSI exceeds 45, with an entry price of $0.0849. The stop loss will be set at $0.0889 to protect against unexpected upward movements. The target price will be $0.08, aiming to capitalize on the anticipated downward trend. To refine the strategy, we will incorporate the Bollinger Bands. When the price touches the upper band, it signals a potential shorting opportunity. Conversely, when the price approaches the lower band, it suggests a possible bounce. Given the forecast, I anticipate the price to test the lower Bollinger Band. Therefore, we will adjust the target price to $0.0809, aligning with the forecast. This combined RSI and Bollinger Bands approach will maximize potential returns while mitigating risks, aiming for a high return investment in the current market conditions. Based on the historical data and forecast, DoubleZero has been in a downtrend. The RSI consistently remains below 50, dipping into oversold territory multiple times, most recently at 34.2 on July 24, 2026. The forecast data further indicates a continuation of this downward trend, with prices predicted to fall to 0.0587 by July 31, 2026. The Bollinger Bands are narrowing, suggesting decreasing volatility, but the price is consistently near the lower band, reinforcing the bearish outlook. Therefore, I recommend a short selling strategy. Entry price will be $0.0622 on July 25, 2026. The stop loss will be set at $0.064, just above the upper Bollinger Band to avoid being triggered by short-term volatility. The target price will be $0.0587, aligning with the final forecast price for July 31, 2026. This strategy aims to capitalize on the anticipated continued decline in DoubleZero price, with a conservative stop loss and a realistic target based on the provided forecast. Based on the historical data and forecast, Shiba Inu shows a sideways trend with prices fluctuating between a support of $0.00000410 and a resistance of $0.00000430. The RSI consistently remains between 32.7 and 45.2, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have remained relatively tight, with the bottom band consistently at $0.00000410 and the top band fluctuating around $0.00000450, suggesting low volatility. Given the forecast predicting prices around $0.00000410 for the next week, a conservative strategy is recommended. I suggest a long position entry at $0.00000410. Place a stop-loss order at $0.0000405 to limit potential losses. Set a target price at $0.0000425, aiming to capture a moderate upward movement. To optimize the portfolio, I suggest combining the RSI and Bollinger Band strategies. When the RSI falls below 30, indicating an oversold condition, and the price touches the lower Bollinger Band, it signals a potential buying opportunity. In this scenario, enter a long position at $0.0000410, set a stop-loss at $0.0000405, and target a price of $0.0000425. This approach leverages both indicators to confirm the entry signal, improving the probability of a successful trade. The sideways trend and the forecast price around $0.0000410 support this strategy, providing a reasonable risk-reward ratio. Based on the historical data and forecast, Algorand shows a slight upward trend. The price has been fluctuating within the support of $0.0837 and resistance of $0.0865. The RSI is currently at 50.1, indicating a neutral position, but has been trending upwards recently. The Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout. The forecast predicts a gradual increase in price, reaching $0.0876 by July 31, 2026. Therefore, I recommend a moderately bullish strategy. I suggest a long position with an entry price of $0.0843. Given the recent upward trend and the forecast, a stop-loss should be placed slightly below the support level at $0.0832 to mitigate potential losses. The target price should be set at $0.0861, aligning with the recent resistance level and the forecast price. This strategy aims to capitalize on the anticipated upward movement while limiting risk. Furthermore, I suggest a secondary strategy based on the RSI. If the RSI falls below 20, enter a long position with a stop-loss at $0.0837 and a target price of $0.085. If the RSI exceeds 80, enter a short position with a stop-loss at $0.0865 and a target price of $0.0843. Combining these strategies creates a portfolio that can adapt to different market conditions and maximize returns. Based on the historical data and forecast, LayerZero shows a downtrend with recent price fluctuations. The RSI indicates the asset is currently in a slightly oversold condition, hovering around 49.6, but has spent a significant portion of the period below 50. The Bollinger Bands show that the price has been oscillating within the bands, recently nearing the lower band, suggesting potential for a bounce. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position at $0.814, coinciding with the first forecast price. Our stop-loss will be set at $0.786, just below the support level, to protect against a further decline. The initial target price will be $0.856, aligning with the recent high. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI moves above 50, we will adjust the target price to $0.88, aiming for the midpoint of the Bollinger Bands. Conversely, if the price touches the lower Bollinger Band and the RSI remains below 40, we will maintain the stop-loss at $0.786 but reduce the target price to $0.835, reflecting a more cautious outlook. This dynamic approach allows us to adapt to changing market conditions and optimize returns while managing risk effectively. Based on the historical data and forecast, DeXe exhibits a significant downtrend. The RSI consistently dipped below 30 for several days, indicating oversold conditions. The forecast for the next week projects a continued decline, with prices falling as low as $11.7. Considering these factors, I recommend a short selling strategy. The entry price for this position will be $19, capitalizing on the anticipated downward movement. A stop-loss should be set at $13.5 to protect against unexpected upward surges, and the target price is $11.7, aligning with the forecast low. To refine the strategy, we'll incorporate Bollinger Bands. The price consistently traded near the lower band, further reinforcing the bearish outlook. A secondary short position can be initiated when the price touches the lower band of $13.3, with a stop loss at $13.5 and a target price of $11.7. Combining both strategies creates a robust portfolio. The primary strategy provides the initial entry, while the secondary strategy capitalizes on price corrections within the downtrend. This diversified approach aims to maximize returns while managing risk effectively.